stock market analysis for Thursday, January 5th, 2022. Tomorrow we have a variety of economic news being reported. Going into next week, it continues with maybe jobless claims, CPI. Those ones might be the ones that get talked about the most. Also, whatever stocks you're in, check if you need to, if it behooves you, check to see if they have any earnings reports or anything like that that might affect your position. So we're going to get into the looking at these charts. And before I do, I want to remind you that in the description of this video, there's a link to the I Have Success website. You can go there and download some free information. And then there's 3 playlists that are linked in the description. Trading options for beginners is probably a great place to start. But look at those 3 different playlists. And also, I would consider paying attention to the playlist that's popped up right there at 1 minute and 30 seconds. You can come back and get that later. But it's a playlist to paper trades. Ultimately, in my opinion, before you start risking real money, it's a pretty wise idea to paper trade. How long, all that stuff. I'm assuming that you're a grown adult and you understand how to make your own decisions, or at least learn how to paper trade so you can make that decision for yourself. So I'm not going to give you a rule or something like that. I've never heard a rule. For me personally, a rule of thumb that I use is I paper trade until I'm comfortable with, I have an idea of what might happen in a real situation. So consider doing that before you put your real money at risk. We are looking at the futures right now. Futures VIX. We see the last each of these charts, 1 month of data and 1 day candles. You see it's gone down a bit here. Also, looking at the S&P 500 futures, basically been going sideways for X amount of days. We had these two red candles here. This green one in the middle, kind of just ignored. And this is where we are right now. But basically, you see it's really been between this range of about 3,900 and 3,800. But because it's below a downward sloping 200-day moving average, and we see in less than 30 days ago, it just tested this 200-day moving average and failed and came back down here. Just looking at the small little snapshot, doesn't look too promising for some bull action there. Futures for the Dow Jones, you see that, look at that sideways 200-day moving average. And we do see a lot of sideways movement right in here, right? And we also see there was sideways movement here. It tried to break out above that and failed. Probably right around that same time right there. Oh, look at this. All 4 major indices of the stock market. Isn't that interesting how they all kind of move together? And look at they all look pretty similar. Now there's on this NASDAQ, there's definitely a little more down. Now it's starting to sideways out, where this one was starting to sideways out, this one was starting to sideways out, right in there. And this is kind of less of a tight trading range, because you got this little, I don't know if that would be considered a pivot or what that would be, but you see touchdown there. Overall, we still got 3 to 4 sectors below downward sloping 200-day moving averages. The 10-year yield futures looks like it, just looking at this, the way these candles were stacked up, right, came down. Did it break a trend? Here's a pivot. Not really a tight pivot. Maybe, I don't know if that would be considered a pivot. This pivot, I don't know. I see it's like kind of going sideways here, W'd out, boom, went up, kind of pulling back. We'll see what happens over the next couple days. We'll see what's gonna happen. Is it gonna be below or above this 3.8? Right now we see it got up here testing to see how long it was going to stay above the 3.8, but it's failing to get back up there. This one, and definitely these two, maybe even this one. There's a lot of politics involved in the treasuries and things like that. So it's maybe a little more. Maybe you have to put your political hat on a little bit more when you're looking at those macroeconomic type of thing. Oil can be political also. And what do we see with oil right now? Here it is today. This is where it was about 30 days ago. Now granted, it closed right there, closed it there, so it's kind of went sideways, but it went down a little bit, went up a little bit, but it's kind of went sideways, and we see it below a downward sloping 200-day moving average. Natural gas, you see, it's pretty self-evident what it's been doing in this 30-day time frame. But that 200-day moving average, we see in 200 days, it's been going sideways. Gold had a really big pullback right here. However, even though there's that pullback, it still seems like that, right? So we'll see. If it kind of starts breaking down more, then maybe we have a different story. But at the moment, it still kind of seems in line with that. Silver, on the other hand, we got a big pivot here, and it's looking like it's testing that. Right? We really have to stretch. Okay, so maybe you could still consider that an uptrend, but that's not tight like this, right? Like that. That's maybe that's a little more realistic. Here, let's see, it was going up right here. Pulls back here. If we looked at more information instead of 30 days, what if we looked at instead of 1 month, what if you're looking at 6 months? Maybe we'd see a little more, but we're not doing that right now. Down slope on that 200-day moving average, but it's on the upside of that. And so let's see what happens around this $23 mark. Bitcoin still just kind of looking the same, in my opinion. Let's take a quick look at those general markets on the daily chart, with an exclusion of these three, because we already looked at those on the futures chart. The dollar, look at that, boom, the dollar sprung up. Now we had been drawing this bit of a trend kind of channel there, right? I know that's some swervy lines. I never was very good at the old art class, but boom, this is really just, it's popped out of there now, right? That is not in that trend anymore for at least this time frame that we're seeing right there. So ultimately, looking to the left from the price action of where it's at today, you see there's price kind of congestion right in here. So we'll see what happens. This is the dollar. Who controls the dollar? U.S. government and all its little like quasi branches inside of it. So another political thing where sometimes I think what happens with the price action of the dollar might not really make sense when you're just looking at technical analysis, because there's other things pushing it versus just straight free market buying and selling. And TLT, 20-year treasury bonds. Now that had been moving down, and then I don't know, as far as like kind of this channel that it seemed to be in, broke out above that. We'll see how it goes. Generally speaking, what's been going on for quite a while is whatever TLT has been doing, the stock market's been following. So here's our 4 stock indices down here. And so TLT, basically, you could say it had been going up over the last X amount of days. Because even though this opened higher than it closed, and this one opened higher than it closed, look at the price action up. Now we got opened here, closed here. So those two candles kind of zero each other out in a way, as far as this is where we were over here, now we're up here. Does that mean the stock market's going to go up? I don't know. We'll see what's going to happen, because when I'm looking at the stock market, you get the VIX moving up a little bit, right? The fear index, volatility gauge, But moving up in relationship to what is is 22 high or is over 25 high? Check it out. See what you think. What I think is that if it drops down to 20, I know a certain stock that I'm going to be selling some out of the money, far out of the money, naked call options on. But right now, it's not moving the way I want it to go. I want it to drop down here, right there. I want it to hit there, so I can do that. If it keeps moving this way, then at some point I'm gonna make a decision of what point is it gonna hit, and then I would sell the opposite. If you're interested in knowing a little more about how I came to that conclusion, I'm going to link to a video right here. I don't know what timeline it's at, but it's going to be right in there, and that will be to 2 parts of this selling options with the VIX strategy. But I'm going to link to part 2 because part 2 links to part 1. It's just how it is. So I don't particularly like it that way, but gosh darn it, it is that way at the moment. So I'm going to hook you up like that. And what do we got going on here? SPX, Dow Jones, NASDAQ, Russell 2000. You see it kind of in the sideways, but it's below that downward sloping 200-day moving average. Sort of in this kind of sideways, but it's below this downward sloping 200-day moving average. And if we connect this dot to that dot down here, it opened. Oh, we'll go with the close, whatever. Go with the close. You see it's down. Now this one, same thing. It's kind of in this channel. Where do you want to draw your channel at or whatever? I don't know. You draw it wherever you feel like drawing it. If you want to draw it up here where there's not even any price, go ahead. Go ahead. Do whatever you feel happy with your artistic drawing stuff. But we're above this 200-day moving average that is just flat. Price action down. Same thing over here. So what am I thinking? Besides how fun it is to use this drawing tool on a computer, I'm thinking we're below downward sloping 200-day moving averages. Out of 4 major indices of the stock market, how many are below a downward sloping 200-day moving average? 1, 2, 3. How many are above an upward sloping 200-day moving average? 0. How many are just above an upward sloping 200-day? Boom. I mean, yeah. How many are just above a 200-day moving average? So, anyways, not seeing anything too bullish. Sideways to bearish is still what I continue to think, unless I start seeing something that makes me think otherwise. And you know what's great, in my opinion? One thing that's great about trading and investing, whether you make money, that really proves. If you just make money out of luck, that's one thing. But if you can consistently make money via making good decisions, knowing when to, let's say, make money overall year after year, that's going to include taking losses. If at the end of the year you're able to be profitable, and you're able to do that every year, your gross income, gross winners minus gross losers equals net gain, then whether you can prove whatever you're thinking in a court of law, it's irrelevant. You're proving it by the bank account. So now we're looking at these 12 big sectors. I don't know if real estate's a big sector, but I think of these as 12 sectors of the stock market. So we looked at those indices, right? We see what's going on, and this is like looking in a little deeper, like we got a microscope looking in a little more. And it's still kind of a big look because there's X amount of stocks that are in this sector, X amount of stocks that are in this sector. We could look at all the individual stocks that are in XLK. And we could look at all the individual stocks that are in XLF. But we're just going to look at all sectors as a whole here. And we see, what do we see here? Wow, look at that drop down today. So if it starts hit a new low for the month, right? And if it keeps making new lows, then it's definitely not going up, right? Healthcare. Now, healthcare used to be a strong in a bit of a bull trend, but boom. I mean, boom. You don't see that now, do you? Right here to here? No, don't see that. You do see the sideways thing. This was doing the sideways thing, but broke. If tech in the last couple years has been leading the market, so if this is an indicator of which way we're going to go overall, maybe it'll take a couple weeks, a couple months to play out. But if this might give us a little sneak peek, a possibility, then that's what we're looking at. So we see that a little range right there. Look at that 200-day moving average. Look at this 200-day moving average. Look at how the price is in relation to them. And then we got like 50% above, and maybe that's 48% above and 52. I don't know, whatever it is. You could count those candles if you feel like it. Go ahead and pause it. I don't really feel like doing it. Maybe 50 is about right here, so maybe it's about maybe 40, whatever. 40% on the side. But hey, look at that. Look at that. I forgot to mention this part. Now we're back above that 200-day moving average for the financials. So highs, lower high. Low, lower low. But okay, there's one thing that we could say that's a bit of a, I mean, we could make a case. I don't know, it's not a strong case. Hey, at least that's looking bullish. And over here in the industrials, you know, if it didn't have a bit of a downward slope, it just kind of looks sideways. It's going sideways here. I know you count this big one right there. It's kind of going sideways here. Now it's going sideways here, but it's just going sideways just a tad bit lower. Right in here, right in here, kind of like that. So just kind of going sideways, stepping down. Over here with this XLB, basic materials, look at that. You see that, don't you? Right there. You don't even have to draw the line. It's the 200-day moving average. It was doing it right here. Look at that. Boom. All of them got that same candle right there. Kind of had this here with this one popping up there. Similar thing, dropping down. This is a little bit of boop here. I was trying to come up there below that. Let's go. Energy. Energy is a lot more volatile, but overall you see it down. It's above this upward sloping 200-day moving average. Maybe you got like kind of a channel right there, possibly. You know, since the mission of I Have Success is to help you begin your trading journey by learning how to sell cash secured put options in a way that allows me to improve myself. You know, going through the charts like this is improving for me. But let's look at this once I kind of have fun with this drawing tool here, and that is what I am doing. I'm telling you, this is, woo, look at that. That is, consumer staples. What we got going up around like that? Seems like, you know, kind of, look at that. Sort of, but it starts going. I'm winging it right at the moment here. I normally don't do all this. So like, I don't go into this extremes when I'm actually trading. So what am I doing it for right now? You know, you don't know, I don't know, whatever. Nobody knows. I'm just try to have some fun here, because you know, this is almost the same video I've been making every single day. Like, look at all these things we have under downward sloping 200-day moving average. Look at the price actions doing. It's all basically going down, right? It's going down. It is going down. Okay, so now we got some blue lines drawn here. All right, so if we wanted to sell some options, right? Since everything is sloping down, generally everything is sloping down. Like, I think maybe selling some potentially. Now, okay, let me clarify something. This is not financial advice. I'm not recommending that you sell options on any of these ETFs. I'm using these ETFs with these candlestick charts. Just, that's all I'm talking about. I don't know if there's premium there. I don't know your account size. There's all this extra stuff. So do not do any of this. Let's just use this for an illustrative purpose to kind of look at these candles and just look for a quick snapshot. If I'm really going to, me personally, if I'm going to actually sell some stuff, I'm gonna mark up I'm gonna put all these blue markers all over. I'm kidding about that. I'm not gonna do that. But you know what I am gonna do? This is what I go through. Where's my standard charts? If I've never traded the stock before, I want to get an idea of where it's been in the last 5 days, looking at the hourly and looking at the volume. And I look at a daily chart. I want to see where the 200-day moving average. Look at the daily chart over 6 months, and then I'm looking at a weekly chart over 3 years with this red line, and kind of looking at the volume and kind of keeping in mind where the 200-day average should be. And then I'm looking at a yearly chart, which, what do you see here? This is what I see. I see the downward slope here. I see that it was had a line right here. But what have we talked about in the past? When you see that there's a sharp slope, either going up or down, and you see this line, generally what happens, prices end up popping to the bottom side. I know I'm all over here, but let's look at gold real quick. Take a quick look at gold. Because gold did this in the opposite way. Right here's gold. Gold had been moving up. And see this line right there? I don't want to draw on this and mess up what I'm going to do after a couple minutes. See? You can kind of see that line right there. Look at this line moving up. Boom! It popped up prices to that side. What happened with GameStop? Line going down here. See this line here? Boom! Push prices to the bottom. And you maybe could expect that since it's below a downward sloping 200-day moving average, and the entire almost the entire stock market is in a downward trend. There's a lot of weight pushing to the downside. So it should be no surprise. So when your good buddy Brent was selling naked call options way out here on GameStop, I'm not really worried about the risk. I'm not saying that you should do it. It's not suitable for you, but that's why I was doing it. Because I didn't think GameStop was going to be going up. I thought it was going to be pushed down. And you know what? If we were to look at a couple trades I've been doing over the last couple months, we'd see some profit-ola. Now it's a little bit riskier though. Well, selling naked call options. Woo! Look at this. What if GameStop? Boom! What if it did that? Your good buddy Brent has to adjust. If you don't know how to adjust, you don't do it. So what you would do, you paper trade it. You figure it out. You play with it a little bit first. Now let's get back from that deviation. Let's get back into where theoretically we're just looking at candles, and we're not concerned about the price. We're not concerned about expiration times. We're not concerned about the bigger picture, right? We're not looking at 10 years of data to try to get a bigger idea of the trend. We're looking at a snapshot of 30 days, 1 month, 1 day candle. We don't really have much information. There's a lot more that you could do before you risk your money, but we're not talking about risking money right now. We're just talking about doing a little exercise. For example, now, so this one to me is screaming. Over here is real safe. That's what it's screaming to me, because it's below a downward sloping 200-day moving average. I see how it's in this trading range right here. If I'm able to sell something at, let's say, 140 or even 135 or somewhere between there. Now I really don't know if there's any premium there. I have no idea, but just theoretically, let's say if I was able to do that, I would feel pretty good, because look what this price action has to do to get up here. It's got to go through 125 first, and right around this 125 mark it's showing me that it keeps trying to go up there, and it hasn't been able to. Even here it broke above, but what did it do? Actually, it was right here. It broke above on the open, and the very same day, boom, sellers push it all the way down here. The next day, it's down here. Third day, it's down here. So now if I wanted to take more risk, maybe I would look at 130. Maybe I would look at 135. But I know I would feel a lot more comfortable above this 200-day moving average, because look what happened the last time. It got up here. But now if prices started moving up there, and I had a naked call sold, what are two things? Now this does not constitute what's my account size. If you don't have a big enough account size, You're not going to be able to do both of these things. But let's pretend that the price of the stock and the account size work. Well, one thing that you could do is you could turn this into, let's say, a covered call. So right now we're talking about selling a naked call as the price moved up. So let's say I make a plan and I say, let's say if I sold it at 140. I sold my naked call at 140. And I say to myself, all right, if the price action goes from 121 and it gets past 125, and I don't just mean for one day. If I see it closing and I see it starting to test this 130, because look at this pivot here. This is telling me something happens around this 130. When it was above the 130, it acted as support and it pushed it up here. When it's below the one right here, what it's telling me with this drop down, that now it decided, no, we're going lower. That's why it kind of quickly dropped below that 130. Now this day and this day couldn't even get up to 130, dropping back down here. Seems like at the moment, right? And on this day, not even, it's in the low end. It's like, I don't know, 126 or something like that. We could figure it out if we needed to. But so you see my point is, as if the price action starts going up, maybe about 130, if my strike price is at 140, I start paying a lot more attention. How close is it getting to here? And then maybe what I could do is maybe somewhere around this area, I buy shares of stock to cover this position. Now, what's the downside of that? One downside of that is it's more capital intensive, right? On this particular stock, I would be shelling out if my strike price, my naked call strike price is at 140. That means I'm making a commitment to the market that I'm willing to deliver 100 shares per contract. So let's just go with one contract. I'm willing to deliver 100 shares of XLK at $140 a piece. So if I want to cover that position and I buy 100 shares at 135, that's what is that? $13,500. So I got to have $13,500 in my account to be able to buy 100 shares. And if I do, and if it goes up, then boom, I kept the premium from the call and I make that $5 on 100 shares, which is not bad, but it ties up a lot of capital. The other problem with that is, what if it doesn't go? What if it gets up here? I buy the $135, I buy 100 shares at $135, and what if it falls back down here again? You know, then so there's some other problems that you have to potentially think about. Or what you could do is, as it starts moving up like that, instead of buying shares, you buy a put op. You buy a call, because you sold a call here, right? Sold a naked call. Now you buy a call. So now you're covering your position instead of with stock. You're covering it with another option. You turned it from naked instead of selling a naked call, now you probably have sold a spread. Or, you know, depending on where you put the strike price at, you know, maybe you could change it to buying a spread. But that's definitely more advanced, right? That's more advanced. What's going to be simple is something like this, thinking about it this way. We see this one is above the 200-day moving average, it's moving sideways. We see the price action is moving down. We say that, okay, I have $20,000 in my account. And of that 20,000, I don't mind allocating 13,000 to owning 100 shares of the stock if it drops below this price. Now, I'm not recommending you do that with XLV. XLV is not suitable for you. I personally wouldn't want to own 100 shares of XLV myself, but you know, I don't know. So we're just, again, we're just looking at these charts to try to figure out where we sell something. So maybe you sell a put option down here. With this, just from looking at this, you know, it's kind of a wild card. Maybe you could do possibly an iron condor. I don't know, because I see it really kind of range bound, right? Like pivoting here, not going higher than here. You know, maybe you could look at where can you sell a spread, call spread up here, call spread down there, put spread down there to make an iron condor. Now you could also turn this into iron condor. There's all these ways to adjust, but okay. So where would be, what do you see here? Similar to this one, right? Maybe you feel safe selling something down here. In fact, you know, since the whole market's kind of moving down, maybe you feel safe selling something up there. This one, again, you could potentially look for some sort of, here's probably your safe zone up here. Safe zone down here, not sure. Not sure because it's below that 200-day moving average. We got 3 out of 4 sectors downward price action below a downward trending 200-day moving average, and we got one sector that's above a flat 200-day moving average, and the price action is going down. So it's like there's more I think there's more risk to the downside than anything else. So maybe you want to sell something up here. Same thing, you can probably see it, right? Sell something up here. Let's see. But if let's pretend for a moment that these are not ETFs, and let's pretend you're looking at 12 different stocks that you actually wanted to own, and these are the stocks on your watch list. Let's say these are like each a company. So this is some sort of technology company, and it has great fundamentals. It's got its enterprise value to EBITDA is less than 10. It's had good EPS growth rate of like over 10 for the last 10 years. It's like it's a strong company, but for whatever reason, price is selling off. So let's say these are all fundamentally strong companies. You went through, you did your due diligence, you found out these all have strong balance sheets. These are all companies that you believe are going to be around for the next 100 years or as long as you're alive. They pay a 3% dividend or more, and not too high, right? They pay a reasonable dividend for the sector that it's in, and so you'd be able to get it, and you think it's going to be around. So look at this one. It's trending down lower. It just made a new low. I would be watching this. Can I sell a cash secured put option low out of the money? If I want to own the stock, would you rather buy new shoes when they just came out and they're not on sale and they're at their highest price? Or would you rather buy new shoes when the old line is just getting ready to be replaced with a new one? But they got to get rid of the old one. Same thing with cars, right? Now, I know they're not going to get, it's not like they want to replace the stock or something, but do you prefer, if you buy milk every week, do you prefer to buy milk at regular price, or do you prefer to buy it at a discount? Would you, if you're going to buy eggs every week, would you prefer to pay a higher price or a lower price? Sometimes, depending on, are you trading or are you investing? Are you combining the two? When you're selling a cash secured put option on a stock that you wouldn't mind owning, you're combining a trade of selling an option on potentially an investment, which is buying the stock. Would you prefer to spend more money to buy the same balance sheet of a company, or would you spend less money? Which one would you prefer? Like, if you feel like you'd rather spend more money, then I got to figure out something I can start doing to sell it to you, because most people, they want to buy things at a better price. They want to get a good deal. So this one, if I'm selling cash secured put option, if I'm looking to acquire stock by selling cash secured put options, and I'm seeing the whole stock market go down, I'm going to wait a little bit. Where's another one? This one I might be looking at, but I'm looking at to break down here. This one maybe I'm looking at. This one, look at this, boom, that's breaking down here. Right, so it's below a downward sloping 200-day moving average. Price just got pushed down to the end of this range. This one too. What's been really beat up? This has been beat up. This has been beat up. Maybe you can get some good deals, even in these sectors. Is there a technology company that you know how to do fundamental scans for? In fact, that playlist, trading options for beginners, with beginners all in caps, is below the in the description below this video. That'll show you how to use Yahoo. The 5th video in that playlist shows you how to use the Yahoo Finance Screener for free to do a basic scan to start fundamentally analyzing companies. This one, I might look at this. Consumer staples. Looks like it's a bit, getting ready to break this. Not consumer staples, but what's a consumer staple? Let's say egg company. Some company that sells eggs. Where's a good price to buy it at? there is a price that if it's a good sound company, there's a good price where it's a fair price to pay, and there's a price where it's a bargain. So you want to try to figure out where's that bargain. You want to pay a fair price? You can pay a fair price if you're like, hey, I want to own the stock. It's fair to me to buy it at this price. Put your strike price there. Maybe the same thing here. Maybe the same thing here. Let's wrap this up. Hopefully you got a better idea about fundamentally. It's definitely not the be all end all, right? Technical analysis is really an art form, and it's something that you only get better at it by practicing it. But that's how you can kind of potentially quickly look at things. So what I would suggest for your paper trading account is watch that playlist, and definitely go through that 5th video where you have an idea of how to use the Yahoo Finance Screener for free. Screen for some stocks and pick out 1 to 5, no more than 5, and look at charts on them. Set up some charts. Set up charts. When you go through that playlist, it'll show you how to set up charts. It's going to show you how to look at the monthly, the weekly, and the daily. And it's going to show you how to use something like the MACD or some stochastics. Like, I don't really use those that much, but I used to. And over time, I kind of, went away. But as a quick way to look at it, when you're looking at a monthly chart, a weekly chart, and a daily chart, and that MACD or the stochastics, they're all in a line, there's a high probability that stock is moving in that direction, whether the MACD is going down or whether it's going up. So overall, we got a downward trending market. So you could look at is the monthly time frame, because that's your real big time frame. What's the monthly time frame doing? It's moving down. Okay. What's the weekly doing? The weekly's moving up. What's the daily doing? The daily's going down. So you got an alignment of 2 out of 3. Is that good enough for you? Depends on what your trading plan is going to be, right? Your investing plan. I know for a fact, though, if your big wave is moving down and then your medium wave is moving up, you're probably not going to get as much to the downside on the daily, but you're still going to get some downside. So if you can be patient, or you have enough stocks that you can find something that's all in alignment, you can be patient and you can potentially wait for that daily, or that weekly to turn over and to start going in the direction of the monthly. That's one way to look at it. But watch those playlists. Like the things that I'm talking about, this is not like a trading system. It's not like follow these rules. What it is to help you figure out your own rules, figure out your own system. My goal is to show you where there's some water. You got to figure out how to drink it. I'm not pouring it. I'm not going to take a cup and fill it up and put it in your mouth, even though maybe I could, make some more money that way. Because I'm sure, when you get the full, you go to the full service gas station, you can pay a little more. But the reason why I'm not as concerned about that is because that's not what I want to do for myself. One reason why I'm making these videos, I want to expand my network of people that I'd like to be friends with. And I like to be friends with people that are like me, and that they want to learn how to do it themselves. There are people that understand, they want to think for themselves. People that understand that even though there's a lot of similarities in the stock market, nobody has the exact same life. So these people that are trying to sell you a course that says like, are you tired of losing money? It's because of this and this and this. I don't believe that. I think maybe that's why someone's losing money. But I don't think there's one size fits all approach to the stock market. There's so many different ways to approach it that why not dial in something for you? And to be honest with you, I don't even know if you're married, single, or whatever. I don't know. I don't know how much money you have in your bank account. I don't know what your work schedule is. I don't know what your sleep schedule is. I don't know what your health is. Maybe you're someone listening to this that you're paraplegic and you can't even move your arms. I don't know. But I do know that no matter what your situation is, there's still a way you can tailor a way for yourself to make money in the stock market. And I think as long as you have a bank account, an internet connection, and you spend money at least once a year, it is in your best interest to figure out a way to make money in it, because prices are not going down. They're only going up. Ever heard about a $5 footlong? it used to be something at Subway. When the $5 footlong turned into the $7 footlong, that was years ago, I already knew prices were inflating. So I hope one day you can be in the same situation I am, where no matter what, somebody with a lot of dental work, a nice haircut, an expensive suit that gets in front of TV and starts telling you what is or isn't, I hope you're able to look around society around you and realize this person, if they think that's true, then they don't know what they're talking about. Or they know it's not true and they're being paid to say it. And you don't need to rely on somebody on TV to figure out what you need to do. You'll be able to figure it out for yourself. Like I said, several years ago, I already knew prices were inflating when the $5 footlong turned into $7, and then inflated to $9. And now I think it's like, I think I pay like 13 or so for the $5 footlong. So that's only going to keep going on. You guys have a fantastic day, and I encourage you, learn how to do this stuff so you're in a better position to make the appropriate decisions for yourself and your family. Aloha.